Welcome back to the Junior Small P channel. Who wants to take a real quick, fast-paced run through some headlines on gold today? Guessing that's why you clicked on the video, that's why you're here. Welcome, thanks for joining us again. We're kind of at a crossroads for 2016. For some people, this might be a difficult time to make a decision on whether or not they want to jump in, purchase gold or not. I kind of get that question often here on the channel. And I'm not your financial advisor, I'm just your friend. So don't ask me. That's a decision you have to make on your very own. We got to all put our big boy pants on and decide when is right for us to purchase gold, at what time. You know, everyone's financials are different, everyone's occupations are different, their position or place in life, where they are when it comes to if they're young, if they're middle-aged, if they're older, if they're just starting out in a career, or if they're at the end of the career, and what other investments they might have available. And there's several opinions today in the news, several ideas, and it looks like when you read through the headlines that it's exactly what I just said. There's kind of we're at an intersection, a crossroads. We can turn in multiple directions here. Gold could go either way, according to some people, for 2016. It could go up from here, it could go down from here. If you're asking my personal opinion, as I've stated in earlier videos, I think gold is going to finish the year higher, somewhat much higher than where it actually started 2016. So let's look at these articles, these opinions. There are some counter opinions of people thinking that are a little bit bearish. So we'll even cover that one. This first article here is by G.E. Christensen, and he's saying future gold prices. He gives a couple of different scenarios. I'm not going to put all of them up here. He gives a total of, I believe, 3, but in scenario 1, which is fairly accurate, fairly realistic according to what we've experienced in life in the past and where we are right now, is kind of the status quo, just a continuation of what we've already seen with politicians and central bankers and how they manage the funny money economies that we all live in. You know, increasing debt, currencies devalued against each other, stock markets collapsing a little further possibly, puts that in there as an option. But ultimately, when he looks at the status quo scenario, which is, I think, the most accurate of the 3 he presents, he does talk about a major deflationary event occurring, and I don't see that really happening. He also talks about a hyperinflationary event, which there's so many factors that would have to occur for that to happen, and so much that involves. It's kind of more unlikely, so I picked this one to cover as the more accurate or the more likely scenario, and that's the status quo, just continuing the way things are going. And if you look at it, he predicts a fairly significant rise in gold prices in the coming years. And you can see there, the green is his calculated gold price. And as you can see there, sometime around the 2021, 2020 years, he's got gold hitting somewhere in the 3,000 neighborhood. It even looks like it's a little bit above that. Now that's his individual predictions of this. Now, this model he based on reasonable assumptions, but there is no guarantee that those assumptions will be fulfilled. He says that right there. Strange and unexpected events have unfolded in the past decade. Some examples: in 2007, few expected the S&P 500 to fall below 700. And who expected 7 years of essentially zero interest rates in the U.S. after the 08 crisis? 3 years ago, who would have predicted that in excess of $7 trillion in sovereign debt in 2016 would yield negative interest rates? And who in 2013 would have predicted a sub $30 a barrel crude oil? The very good examples are negative interest rates. And now, you know, look at the national debt. Just the 19 trillion that we just hit recently as a landmark number for the U.S. debt. So being that strange events can occur and there's overwhelming debt, he also talks about the secondary and tertiary consequences of stupidity, wars, quantitative easing, zero interest rate policies, negative interest rates. They're difficult to predict, but we can get information out of the news that can help us. And being they're talking about ZERPs now quite frequently, zero interest rate policies, It's a likely scenario to unfold. It's already happening in other places. His conclusion is, how crazy will it get? The future price of gold is very much dependent upon the reactions of governments and central banks regarding the current deflationary forces. Status quo response, so the most likely scenario that he talked about, would result in a price range anywhere from $3,000 to $5,000 an ounce for gold. That's quite possible. And at some time in the 2020 to 2022 range, if not sooner. He talked about also, if the deflationary crash response, gold will substantially increase in purchasing power, but its price in dollars, euros, and yen, etc., is difficult to estimate, depending on the economic damage that occurs. And if there was a hyperinflationary response, then the price of gold would be unbelievably high. We've all seen examples of that in the past with other economies, and there's really no way to measure where gold would be if that occurred here, because we don't know the level at which the hyperinflation would occur. It could be anywhere from $100,000 an ounce to $100 trillion or more. It just depends how much they want to destroy the currency and what actually unfolds there. Well, gold price lately, it took a dip today, but it's holding at higher levels despite this recent dip. Strong equities means recent waning has continued, but investors continue to back the yellow metal. This was an interesting chart. It's a very small chart, part of a main headline, but I thought it was a neat reflection of what occurred since the beginning of the year. You can see gold and green there, just kind of busting up past the 12% mark, and then you see the Dow Jones there, dipping below the negative 6% range. So gold behaving pretty well. And this all comes from an article, Global Mining Observer, independent coverage of the mining markets. Now, this article talks about some predictions from two considerably reputable individuals, considered by the article to be reputable anyway. And the first one is Ross Norman. He's a consistent gold price forecaster for the London Bullion Metal Association, and says the pressures are driving gold higher will not go away. And he gives several examples when you read through the article about the Japan recently following Switzerland, Sweden, and the EU and lowering interest rates below zero as an unprecedented financial experiment. And so he's obviously bringing up the zero interest rate policies that we just talked about and have talked about in the past. And that's one of the main drives behind what he sees causing gold to definitely rise. And so he sees a strong case for gold going into the future here. And then you've got this Charlie Morris, who was a little bit bearish, it sounds like, in 2013. He turned bearish on gold. But he's now shifted his views on where he sees gold. Believes that gold will be rising in all major currencies, underpinned by monetary easing. This year it has been climbing in yen, euros, and sterling. Long-term averages have steadied but are not yet turning upwards. His third criteria is momentum. Jewelry buying and mine supply tend to be pretty steady, so it's the investors that really decide whether gold is going up or down. But the main point with Morris's predictions here that I took out of his statement is that he's confident that December's 1,050 price for gold was the bottom of the market. He doesn't believe it'll go off like a rocket like it did in 1999, but again, key point here, key takeaway I had from this article was that he believes the bottom was the 1,050 low. The gold longs jump again despite price slump. Gold net long grew for the 7th week in a row, but price fell to $1,191 an ounce from the $1,263. Gold could see some long liquidations. Chartists look for retracement to the 1,190 per ounce. This was an article on all the different shorts and longs for commodities, and there was a lot of technical jargon, a lot of different charts in there. But it was definitely an interesting article in some of the charts that they had, and just talking about where gold is right now and where it's possibly going to be in the year. Again, just further predictions. Money managers remain strong buyers of metals, not least gold and silver during the week ended February 16. The gold net long position rose for a 7th consecutive week despite a price slump of $1,191 an ounce. And getting ready for a buying opportunity in gold. Here's another article by Adam Hewison out today. He's talking about a pullback in gold being a buying opportunity or a watching opportunity. He thinks it's the latter, and there are reasons why. Gold has had a remarkable rally from early December to just a couple of weeks ago when the price of gold peaked at $1260 in the spot market. There are two things that he's looking at in this market. One is for further consolidation, and the second is that he believes a major cyclic low will be occurring in the near future. That kind of matches up with the last guy talking about the second quarter for gold being quite difficult. So he believes, this gentleman, that sometime during this year, in the near future, we're going to see a major retreat on gold prices, down around that 1100 mark, and that could be an opportunity for individuals to buy. Now, this article by Jason Stevenson, also out today, much more negative tone. He believes that gold will crash. I love when they throw that word out there. He believes it's going to crash to US $931 per ounce. And is that going to happen? This is out of Australia. This article is where I found it. It was an Australian author, I believe, and he mentions some of the statements we covered last week and the weeks prior. Quotes Mark Cuban again, talking about gold, how that's where everyone's going to be, so that's why he went there. Indeed, gold's had a great month. The metal's up, surged from 1173 to a high of 1263. Unfortunately, he doesn't believe the rally is going to last. A massive short squeeze, so expect gold and gold stocks to collapse in the months ahead. And he talks about how gold will ultimately deteriorate from this point. So Jason believes gold will ultimately crash down to 931 this year. I do not agree with that position. I think that there's a lot more strengths and a lot more supporting gold than there is that can erode it from these current levels. But who knows? Could be wrong. He might be right. He could be the one that wins the whole argument here of all these different articles and opinions. But when you look at the news, when you look at what's going on around us, and I'm just going to take one example here. It's an opinion piece. Chilling ways the global economy echoes 1930s Great Depression era. And it's an article that covers some of the similarities of protectionism, shaky debt, and weak banking systems that are creating an environment that is very similar to the 1930s Great Depression era. And this isn't the only reference I have seen referring to similarities today to events and situations that took place during the 1930s. So, if that's the case, then yeah, having some metals is definitely a secure place to hedge wealth and protect oneself. We saw how quickly, just take this moment for example, just listen for a second on this. We saw how quickly this year opened up, and it was almost like the floodgates. We went from everything's fine, everything was going great, to all of a sudden the Fed made one tiny move, a quarter-inch rate adjustment, and then not that that's the only reason that this occurred, but soon the stock markets began collapsing with the price of oil as it free fell, and it just set off a cascade of events and almost like a domino effect in trades to where, well, everything just started dropping. The markets went into chaos. And how did investors react? What was the knee-jerk reaction? Well, they went to gold. Gold immediately began to see favor again and rise in price, as it is priced in dollars, as a reaction to the instability of the global market. So that you got to keep that in mind. That's how fast it happens. No matter how much smack talk, how much negative press the financial media and these individuals can give gold, as soon as things get rough and a storm looks like it's on the horizon, everyone forgets everything they've read or heard that's negative about gold and immediately and instinctually turns to it as a place to park one's wealth. So if we're going into a 1930s-like era, or if things get really bad really quickly, or something unforeseen pops up in the news that's very dramatic, we could almost bet that there's going to be another rush for gold. Thank you all for joining us today. Today was an especially boring look at the news. I understand that, but that's what we do here on the channel. We embrace the boredom of these types of headlines and conversations and discussions. It's just something that we have to do. Thanks for being here. As always, have a great day.